Welcome to another trading video. In today's video, we are going to go over the trades that we took last week, and we will then go over the trades that we see potential setups for next week. So that would be Monday the 14th of October. This video has been recorded on Saturday the 12th of October. So firstly, last week we only identified one potential setup. The week before that we had several good trades, several good setups. We never took them all, but they certainly all went in the direction. We don't want to win too many trades at the one time, so I think we took 3 out of 7. But the 4 that we never took, they went the direction that we thought. So Euro, Great British Pound, I'll just go over to the last week's video here. You can see it here, and you can see that we were looking for this to potentially reach this dotted line here, which is the 52-week low, and we were obviously creating some support here also. If we broke through this 83, then we would be looking for entries at the kind of 84 region, or just a signal that the market was reversing anywhere under this 52-week. That's where we would start paying attention, because we're at a 52-week low. So you can see here it was 83, but slightly above the 83 there was this low point. So if we come back to our trading panel, so this is the trade here, Euro, Great British Pound. You can see that we didn't quite make it down to 83, but we entered on this bounce of the support zone. We had a big engulfing candle. We drilled down to the 15-minute as well. We drilled down to the 15-minute for our entry signal, and you can see here that the trade played out. I'll just show you when we entered. We entered on the Tuesday, and our exit was in this big candle here, which was on the Thursday. So we were in this trade for 2 days, and we could have potentially aimed for this region here, but I think there was a news event. Obviously you can see, but the news event has created this big massive momentum candle here. So we obviously had our stop loss here, take profit here, and that happened at 6 o'clock in the morning when we were not monitoring. So that was a 3-to-1 trade, but not 2-to-1, that was a 2-to-1 trade. So that was the Euro, Great British Pound, so it was another one that went in the direction. Another trade that we took, if you've been watching my channel for a while, you know that oil, if you look at the history on oil, it's our best asset to trade. This one here, became very close to stopping out, but we recovered and we got out at a small profit there on this trade. And the week here, just with what's going on in the Middle East, if you look at this, we'll just give you more context. If you see here, we're in a downtrend, a clear downtrend, and then we started to change. This is with the troubles in the Middle East. We started to trend up, and then there was a big pullback here to this support area. So we took an entry after it had bounced. So you can see there was a kind of decent sized rejection wick just here, this rejection wick. So we entered here with a tight stop loss, with a very tight stop loss on this one, and our trade played out. Again, this trade we entered on the Wednesday, and we were out same day or next day, so it was a same day next day trade. So that was a successful trade on oil. This was a 3.5-to-1 trade. I think we get out at 3-to-1. We exited the trade somewhere around here. So the next trade we took was gold. Again, we just changed the colours here. Again, this was a similar trade. If we look at the bigger context, you can see clearly that this is an upward trend, and then we had this big pullback here. So we entered here. We had a signal saying that the market was reversing. If you can see, we had a big wick here, the big wick. So our stop loss was placed below that big wick, and we entered here. We're still in this trade. This is still an active trade. We believe we're going to make an all-time high here. Another context to show you what I do with gold. Every asset's different, but this is a good strategy for gold. So you can see these grey boxes I have measured out: 122, 127, 97, 126, 110, 55. This is me measuring the pullbacks. Every time there's a pullback, how deep does it go? So that's me measuring it here. And you can see here we had a pullback of 80, which is the biggest pullback we'd had since this 110, which happened at the beginning of August. And yep, you can see our entry criteria if we zoom in. There was a big wick here, a big rejection wick here. It also started to create a little bit of support. If we just take our tool here, you can see this area here. It started to bounce off this and respect this area. And then we did this big wick. That's why we entered. So this trade is a 4.5 to 1. We're still actively in this trade. So that was a good week last week. We had no losses, we had 2 wins, and still an active trade where we're in profit. So let's now turn our attention to the week ahead and look for what setups we see playing out. So the first one we've got here is GJ. So again, in previous videos, you'll see that previous resistance zones get broken through, and then they become resistance zones. So what we're looking for in this instance, because the context to this is, look how much this fell off from this 208 region. So there's a lot of ground to make up here. Look how much it fell, and you can see it's making higher highs and higher lows, and it's trying to recover. So our setup for this is we're waiting on this resistance zone here getting broken. I'll just make this larger. We're waiting for this zone to be broke. It will then come back and retest this here, this previous resistance, and it will become support, and then the market will shoot to the upside, we hope. So when we get to this zone here, in this red area, this is where we're going to look for a signal. So it's came up, came down and retested, and we're going to look for a signal, a long wick, a long tail, an engulfing candle on the 4 hour or in the 15 minutes, and that's a long entry. Next one is USDCAD. So as we can see here, we're at 2 round psychological numbers, 137 and 138. So we feel that it's creating a zone up here. It's creating a resistance zone. You can see it's respecting this several times on the 4 hour candles. So we feel it's going to go short if we do break this zone here. This zone. Get an arrow. If we break this zone here, we're going to wait for it to come down. Look for a signal in here, engulfing candle or a big wick. And then the breach of the 137. If it breaks 137, we see it going down to this next support resistance zone. So that's USD CAD. New Zealand US dollar. So you can see here, this is a round psychological number. It's came up. We've actually missed this trade, but there's still potential. If this trade can come down here, put that down here. If this trade can come down here and sweep this, we will then be looking for a signal to go long. It will come down and retest again. So this is a setup that we're looking for on New Zealand US dollar. Australian New Zealand, we're at a round psychological number here of 111 and then 112. You can see we're in a clear uptrend. So we're looking for the market to bounce here. We've obviously got this area here, that's previous resistance. So once the market gets into this, let's say, red zone, that is where we will start to look for entries. once I come into this red zone, we'll be looking for the market to create a big wick or an engulfing candle off this resistance. Potentially it will travel all the way to 112 before we see the signal. And then our entry is going to be somewhere in this red zone, and we're going to target this here, this previous support and resistance area. Let's change the colour of this. So that is Australian dollar, New Zealand. Next is Euro USD. I'll just change the colour of some of these. So the context here is we're at this round psychological number of 109. It's already bounced off of it, but we're looking for a retest. You can't get them all. This is one that we've missed. This bounced off here, and obviously it was on Thursday there. We'd obviously we were in, I believe we were still in 2 active trades on Thursday, and that's maybe the reason why we never entered. But yeah, that would have been a perfect entry here. But we're waiting on this coming down and retesting. So if the market can come down and retest this area, then we'll be looking for a setup like this. Next one is CADCHF. So this is a really nice setup here that we've seen time and time again. You can see this support zone. You can see that every time, this swept this, this swept this, and it's creating support here. It's creating support here. Whenever you see this, the more there are, the more supports there are, the high likelihood it is that the market's going to come down and sweep just these zones here before moving back up. So this is in a consolidation zone just now. We're also at this round psychological number. We've got a news event here coming up soon as well, on the 15th. So we need to be aware of that. But yeah, we see the market going back up to this round psychological number here. But we're just waiting on a sweep. Waiting on this coming down, sweeping these zones here. So it would come down lower to give it some liquidity to move higher. And you'll potentially see it come up, retest this zone before shooting up to this zone. So our structure would look something like this, and this would be below the sweep for a 2.5 to 1 trade. So that's CADCHF. So as you can see in today's video, we've got multiple different strategies at work here. We've dug deep and looked for, not just when you're trading, you need to look for other opportunities. It's when you become profitable and you're comfortable with your setup and your strategy and you've got solid data behind you, then you can experiment with other things. And when I say experiment, I've seen this type of setup happen time and time again. Now this may bounce here and go back up, and I'll not enter the trade. But if it sweeps these zones, then I'm going to start paying attention. It's maybe not such a good thing for you to do if you're starting out and you're new at trading. What you don't want is you don't want several different strategies running at the same time, because your data, you're not going to be able to crunch your data and see what works and what doesn't work. If you've got, after 100 trades, if you've got 70 wins and 30 losses, it's very hard to decipher what strategies were used. So you should really be sticking with one strategy and really testing it out once you become comfortable with that. So for me personally, I know that my strategy, looking at POI's point of interest for me, is a 52-week high or a 52-week low. That is where I specialise, let's say. That's where I'm comfortable, where when the market is close to 52-week highs or 52-week lows, and I've drilled that down. It may not be close to a 52-week high, a 52-week low, but it may be making a higher high that is way overextended. I'll just explain here. So if we see the market doing this, making new highs, and if I see this, you can see this is a huge, these are small retracements. I'll measure and calculate how much are these retracements, and then when this happens, this is a massive move up. So when this happens, the market typically will move, it's ready to come down. Yeah, it's ready to come down, and it will come down at least whatever this average measurement is. So it's a very simple strategy. You know, you can see your higher highs and your higher lows, and then this is overextended. That's what I call it, overextended. Now, your high, your 52-week high might be a way up here, 52-week low might be a way down here. This strategy for me is golden when you're close to round psychological numbers or 52-week highs, round psychological numbers and 52-week lows. When it's overextended like this, it's just adding confluences. And then obviously if you've watched all of my videos, you'll know that when we get to this overextended area, that is when we start looking for, let's say we're at this round psychological number, we're way overextended, we may or may not be close to a 52-week high. It's at this stage that we'll start looking for signals, big rejection wicks. It may be engulfing candles. It may be, like we've showed you in this video, multiple hits, creating a resistance zone. See likes of this. If you're around close to this number, you're overextended and you've got a bit of resistance starting to form with 4 or 5 candles. So that is the strategy that I am comfortable with. But after studying the market for years with this strategy, you end up seeing other setups play out like so. And so you can incorporate different strategies. Again, it's something I would strongly recommend against until you have a solid strategy that you know works. Then you can start experimenting with other strategies as well. And the reason why I've done this, you can see last week we only had this one setup, because 52-week highs and 52-week lows and overextended 52-week highs, 52-week lows happen. Sometimes you'll get 7 in the 1 week, sometimes you'll get none for 2 weeks. So that's why I've incorporated the overextended. It's not nearly 52-week high or 52-week low, but the higher high or the lower low is overextended. I then incorporated that to get myself more trades. And then sometimes there isn't 52-week highs, there isn't 52-week lows, and when I'm making these videos on a weekend, there may not be an overextension either. So that's why I'm looking for other opportunities. So I hope this video has been helpful. I think we still had one pair to look at here, in fact. Yep, the Euro Swiss franc. Again, it's creating this support zone. So we're looking for it to sweep. We're looking for it to retest. And then come back through, retest. And then this red zone. This red zone here, if that's the only reason why I use these boxes here, this isn't my exact entry, you know, so when the market hits this zone, I'm not going to enter. I actually want the market to come down into this red zone somewhere, and this is where I start looking for an entry signal. I may come down to the 15-minute to look for it also. It may not be in the 4 hour. I may come down to the 15-minute and look for it. It may make a higher high and a higher low in this zone. It may make a big engulfing candle. It may have a big rejection wick. That big rejection wick may be off a round psychological number. So it's all those things to take into consideration as an entry point. So I hope this video has been useful, and happy trading next week. Until the next time, please stay safe.